Keith, thank you so much for being here with us. For those, you need no introduction for our clients, but for those few that maybe haven't seen you, it's Keith Kaplan, CEO of TradeSmith. Um, like I said, most of our clients, Keith, know about TradeSmith and know that you're the lead innovator there as CEO, and really have become accustomed for appreciating the tools that you're building over there. But for those few that may be less familiar with TradeSmith, could you maybe give a little bit introduction and perhaps talk a little bit about your background and how you've built the tools?
Absolutely. It's great to be here, Austin. Thank you so much. I've been building software for probably about 30 years now. And, it was about 10 years ago, I just sort of had this epiphany that I've got to get my financial literacy down and I have to match it with my mathematics background and my software engineering background. And shortly after that, I started at Stansberry Research to help them build some different systems, but it wasn't quite what I wanted to do. What I really wanted to do was help empower the individual investor through software, through tools, through really powerful websites. And so I'd say it was probably late 2017, I had actually joined TradeSmith as the
Mm.
chief product officer. And my job there was to take our product TradeStops and modernize it and then build a whole series of products after that to help the individual investor, because we want people who want to fish on their own to be able to control their whole life cycle of investing with us. And so, it's been just wonderful. I took over as the CEO a little over 3 years ago, and our focus has just been taking the core of what we do at TradeSmith, which started as trade stops, and exploring other avenues that we can help investors be successful with new tools and new services.
That's great, Keith. Yeah, that is exactly leads into my next question, because I think, you know, nearly all of our clients probably have heard Stansberry Research espouse the value of looking at trailing stops, and in
Mm.
particular doing that with TradeSmith. And so TradeSmith for a while was synonymous with trade stops, and trailing stops. But you have built so many more tools on top of that. Maybe you could talk about some of those in particular that you think are most valuable to individual investors.
Absolutely. So we started in 2005 with a simple website that just basically tracked trailing stops. It got data from the web that basically would help us understand stock prices at the end of the day. We would then calculate a simple 25% trailing stop and then send out an alert to customers to say you hit your trailing stop. And what we found was having the planned exit, a 25% trailing stop, was fantastic. It beat most human beings because as humans, we're way too emotional about our investments. We always buy high and sell low, and we want to
Right.
flip that sort of narrative, and trailing stops helps that. And we discovered sometimes it doesn't matter what you're investing in, it matters what your plan is and how you get out. But when we kept at it over the years, we realized that no two stocks, no two funds, no two anything behave the same way. And so having a generic 25% trailing stop meant that we were sometimes limiting our upside, and we were sometimes getting out way too late on a stock that wasn't as volatile. So we
Hmm.
built something called the volatility quotient. And this basically studies the pattern of volatility in any asset that we cover. We actually have 150,000 different securities in our system. So that covers the 6,500 stocks, index funds, mutual funds, ETFs, everything out there. We pretty much cover it. And we do some work globally as well. Not all of the exchanges, but we do some work globally. And
Hmm.
so what we found was there's this pattern of no two things behave the same way. So we built the volatility quotient. This would study the volatility of a stock, a fund, whatever it is, and help you determine a much more optimal trailing stop to set. So Tesla, we would set like a 50% trailing stop.
Hmm.
Johnson and Johnson, we might set a 17% trailing stop based on that number. But that number really helped us to unleash this business and do so much more for the individual investor. People were saying, look, now I know how to get out of a stock, but when do I get back in? So we created a simple stoplight system: red, yellow, green. Red means sell, yellow means hold, and then green means buy. And we leveraged the VQ as more of the engine of that system, but then the stoplight was more of our steering wheel. So
Hmm.
now we can tell people exactly when to get in based on this health indicator and when to get out. But we didn't stop there. And we've built so many more tools over the years. But the last one I want to mention to you is really around position sizing. we found that it does not matter what stock you buy. It matters when you buy it and when you sell it. But position sizing is how you save and grow a portfolio. You put way too much money into a volatile stock, you have an unmanageable loss that you could potentially have. You put way too little in a conservative stock, you're really limiting your upside. So we said it doesn't matter what you're putting in your portfolio, but it does matter how you balance it. So we created that. And of course, as you know, that all sort of led to a stock rating system on top of
Hmm.
that. And if you'd like, I can go ahead into that because I know that's really interesting to you as well.
Yeah, please do. Yeah, we're excited about that part of the business as well.
Yeah, wonderful. So the stock rating system was something that we created, I'd say probably about 2 years ago. And our goal with that was to not just give people a simple, here's when to get in something, here's when to get out. We wanted them to understand, do our indicators, do our factors behind the scene help us to see something that the market can't see? Do we see a stock that is very bearish, but everybody is super bullish on it? Do we see a stock that's very bullish, but people are bearish on it? And so, what we wanted to do is combine all of the stuff that we had built so far, plus all of these things that we knew that we've developed indicators, research papers. We have PhDs on staff, we have analysts on staff, and we wanted to figure out, is there a better way than everybody else out there to tell somebody when a stock is bearish or bullish? And so, this system has been incredible for us and for our subscribers as well. And we put everything into that. We have the stoplight system goes into that to inform you if something should be bearish or bullish. We look at what the billionaire investors are doing because we scrape all of their data and put it in our system. So we understand, what's Warren Buffett buying? He's a great value investor. What is he interested in? What are these other billionaires interested in? We also developed a quality factor. And so I was inspired by Stansberry Research and capital efficient stocks many,
Hmm.
many years ago, like the buy and hold, forget about it for the rest of your life, the forever type of stocks. But I wanted to go a step further. I wanted to figure out what are really great quality stocks that you should own, regardless of their market cap size, regardless of what they've done in industries, their products. And we basically built a 5-step ranking system where step 1 is you are the lowest quality out there. Step 5 is you're the highest quality out there. So we married all of our indicators and all of this research that we've done behind the scenes for years, probably for a decade worth of research. And we boiled that into a stock rating system that really simplifies how to look at any single stock out there. It covers funds as well. And you're basically just looking at, is this thing very bullish? Is it very bearish, or somewhere in between?
Well, that's great, Keith. Yeah, and as you know, we've been looking at your system and your different qualitative, quantitative, technical tools in trying to see how we can marry that with what we're doing, and we're really excited about that. Listen, I don't want to let the cat out of the bag because we're going to be talking later today. We're having this webinar later tonight with our clients, and I'll be talking a little bit about this back testing. But we've basically taken our favorite ideas, run it through your quantitative scoring to come up with kind of a greatest hits version that marries fundamental with technical and quantitative. And I got to tell you, the back testing results are incredible.
I
And,
love it.
and I'm really excited about that. I mean, you have to look, sure, take back testing results with a grain of salt, of course. That they're not perfect, but gosh, they're so impressive that we kept trying and rejiggering it. And we thank you, frankly, your team for giving us reams of data. I think I had to make sure that I had cleared out everything else on my computer so I could run these models. It was 180,000 lines of code, which was great. But what I was curious about, and this is coming from a power user of TradeSmith already, is how well it did in protecting capital on the way down, and then also getting invested on the way back up. Because if you think about the last 4 years, we really have had in a compressed amount of time, 2 bull markets and 2 bear markets. And so your tools combined with our input of our favorite investment ideas, that combination really did well in both scenarios. And so You gave a little bit of details there. I don't know if you could share any more behind the curtain for our clients. You know, my in my looking at it, it looks like you really are marrying those things, which is starting with that volatility, the VQ, then adding some other technical macro factors, adding some fundamental factors in there. It looks like you have EPS and other things going in
Yep.
there, as well as some qualitative things, which is are are smart investors buying this? Are the Stansberry researchers of the world recommending it? Do
Yep.
I have that right? And are there any other nuances you could tell our clients about?
Yeah, you're absolutely right. I think we have 12 different factors that go into play to help us understand if a stock has a very bullish rating all the way down to a very bearish rating. And so for us, we're really looking at the marriage of fundamentals and technicals. You still don't get the human, right? Like what you guys do from a qualitative perspective is incredible. You're looking at a management team, you're looking at the products a business creates. You're looking to see if the market needs that type of thing. Will retail people buy it? We're looking at what's happening in real time, both from the technicals, but also the fundamentals that come out. And we pay tons of money. I don't have it off the top of my head, but we pay tons of money for access to the best data in the world, the type of data that hedge funds leverage. And it is true. We have these technicals that tell us this stock has topped out. It's on its way down. Now is the time to sell. We also have the technicals that tell us this stock has the right momentum behind it where it's going to rise in the near future. Is that always right? Absolutely not. Is it better than a human? Just that one thing? Yes. Over and over and over, we beat humans just with that one thing. But we wanted this rating system to be so powerful. So we wanted it to be informed with the decisions people like you, Austin, make when you look at a stock. And then we want to know that if a whole bunch of people that we trust are buying it, if the big money is moving into it, it means that there's a lot of qualitative look at this type of stock, and that will inform our rating system to start to pump it up to bullish. If it's the other way around, you're selling it, the billionaires are selling it, we start to go down on that sort of stock. But then we're looking at earnings per share and all of these other different things to calculate the quality of that stock. So,
Hmm.
and this is actually really tough. People don't realize this. If every single factor you have in a system points one way, that is golden, but it's rare that that happens. So
Right.
then we have to start formulating with data analysis and machine learning to figure out which one of these factors matters.
Hmm.
So and different industries, different factors matter. So we have really exploded this product behind the scenes, and you'll never know it unless you get to look at how we build the data, how we build the software. But we have exploded this product behind the scenes to just be an absolute killer of a rating system because it's looking at all these different things and it's learning as it goes what's important and what's not.
That's great. Yeah, Keith. And that's really why we're here today. Taking what you've built and marrying it with the fundamental research that we're doing on some of those points that, you know, for example, do we like the management team? Do they have
Right.
a product that is valuable? Is the industry have tailwind at its back? Those types of things. I think it's going to be great. We're here because this we started this conversation years ago. You know, when I was running or I was director of research at Stansberry Research, and you were running and building these tools at TradeSmith. The question then was, gosh, could we improve what we were doing within the portfolio solutions product with something that TradeSmith was doing? And so now when I joined Stansberry Asset Management a year and a half ago, one of my first calls was to you, Keith, and I'm excited. Do you remember when we, you know, got started there talking about that?
I do. It was really humbling because I remember we met for lunch. We went to California Pizza Kitchen in Hunt Valley,
Right.
Maryland, and like I thought we were just getting lunch to catch up because we hadn't seen each other in a while. We saw each other at a couple different investment conferences,
Yeah.
and I remember you saying, "Let's catch up," and it's like it's an honor to catch up with you. And that conversation quickly turned to, could there be something that we put together from Tradesmith and Sam? And I mean, I was just touched. We've been asked many times to do this with different companies, and we have to evaluate them, and we don't want to work with just anybody. And so that lunch quickly turned from how are the kids, how's life, what do you see on the horizon, how's business for you, how's business for you, into how can we have some sort of partnership here? And I mean, It was fantastic. So I really appreciate that this is how this has evolved.
No, absolutely. Thank you, Keith, and thanks to your whole team for helping us with it. We are as well. We've put a lot of work behind it, and like I said, we're excited to be sharing it with our clients. This is a client only launch here very shortly. Um, One more thing, I guess, we at SAM like to say that far more important than predicting what's going to happen next is to be prepared. Make sure
Yeah.
your portfolios are prepared to reach their objectives, kind of no matter what the world throws at you or at us. With that said, our clients love kind of hearing what we're thinking about the world. And I'm curious from your seat, what you think about the markets. Are there any parts of the market that you would lean into? Are there any parts of the market that you would avoid?
Yeah, absolutely. So here's a little bit of optimism. And I'm not going to be the guy to talk about what's happening with inflation, what's the Fed doing, and all of that. I'm looking at the underpinnings of our product. And one of the very first things I built late 2017, early 2018 was a way to break down things like the S&P 500, the NASDAQ, the Dow, and actually we cover 12 indexes around the world. I break them down into a path of every single component in there. So for instance, the S&P 500 has 508 stocks, I think, but it's 500 large cap companies that it represents. And instead of looking at a chart of the S&P 500, you see it going up and down, I wanted to build something I call the true market health. And
Mm,
so what I did there was I took every component in every index that we track, and I built a what I call a wave pattern of seas of green and red. And what I want to see are the individual components in each of those indexes getting more green. So each component turning green and then a volume of components turning green. And that gives us a bullish signal.
mm,
When they are going the other way, when they're going from great to good, good to bad, that's a bearish signal because more are turning red. So we built that. It called both the coronavirus crash as well as it started signaling, I think it was February 12th of 22, that a bear market was coming. And we do that, and we're not very far off the top, but it's because we see those individual components breaking down, and we don't care about market caps. We care about the components and the indexes. So my outlook right now is I'm cautiously optimistic because at its worst, in 2022, we only had 10% of the components in the S&P 500 were green. Now
mm,
we're a little bit over 30%. So that is really exciting. The other exciting thing, so number one is I start to get optimistic about the markets. I am
mhm.
cautious as can be. I'm risk averse. I don't want to lose money. I want to make money slowly or quickly, but not lose. And so
Right.
I'm still cautious, right? But then it's where do I want to focus my time? When I start to drill down, the small caps and mid caps are making a really nice comeback right now. So what we've done is for me personally, but also for our customers, is we layer the system in a way where we're now looking at those small and mid caps that are healthy. They're in a green state, so they have great momentum. We're looking at the ratings of them, but then we're also drilling down into the quality. This
Hmm.
is the time to buy the highest quality stocks in the market that are undervalued, that have positive momentum. And we
Hmm.
actually label this our Trinity project. It's the three things that matter the most in this type of market. So it's what stocks are moving up and are moving up in unison at small caps and mid caps right now. At least that could change. This is we still have a lot of volatility ahead of us. It still could be a roller coaster of a year. But right now, what I'm looking at with optimism are small and mid caps that are on their way up momentum wise, that have strong ratings, but high quality, a quality level 5, the highest quality
Hmm.
you can get. Those are the best businesses to be buying right now.
Love it. Yeah, and we agree, by the way. I think there were some quality companies that have really been derated, like I'm trading at attractive multiples, but long term, you really feel like these are durable franchises. So we're seeing some of the same opportunities. Let me ask on that, on what you were talking about. You want to see things that are doing well, that are more that are in favor. We like to say, of course, you want to do that. You want to see things that have positive momentum, but the market actually loves sometimes when things go from bad to less bad. Does that
Yes.
does that factor into your algorithm as well, where it may not be positive yet, but gosh, it's getting a lot less bad, and that could be an inflection point to positive outperformance.
Yeah, great point. So even in a Russell 2000, the small caps, our system is saying we are bullish on small caps just because we moved from very, very bad to just bad and slightly good. We,
Yeah,
but we're not in that super bullish state there. And so
yeah.
really our system, you are absolutely right. It's the momentum uptick to turn green in our system. You really are going from very bad, from what feels like a bottom to less bad to hopefully getting to good. And that's
Hmm.
exactly when we trigger momentum. We never can tell you exact top and exact bottom. We can tell you when we have a confirmed top, you need to get out, and a confirmed bottom, it's time to get in. And the gap between those is usually huge because you're right. You're still at somewhere around bad and you want to get to great.
Well, that's a huge reason why we're excited to work with you, Keith. Is we think more important than ever, it's time to be nimble and tactical. And we were just impressed with how your system is able, if you take 2020 for example, to get underinvested and exit these securities that were at risk ahead of the drawdown, or mostly ahead of the drawdown or the max drawdown. And then, but just as important, we talk about the problem with some folks trying to time the market is they may get one of the two things right, but just as important, getting yourself invested when the coast is clear again. And so our back test showed that you did a great job with that too. So we commend you for the work you're doing. We're super excited to be partnering with you on this. And I know our clients are as well. So thanks so much, Keith. Thanks for your time, and thanks for the opportunity.
Fantastic. Thank you so much, Austin. And best of luck to everybody out there. Really appreciate all of the support. Thank you.
Thank you. Keith Kaplan, CEO of TradeSmith.